Hey YouTube, this is Zach with Achilles Financial, and today I wanted to talk about Taiwan Semiconductor Manufacturing. And this is a company that's based over in Taiwan, and they supply right at 60% of the total semiconductor market for China, as well as right at 70% of the total semiconductor market for the United States. The reason that I want to revisit TSM, despite having covered it on the channel a number of times, is the fact that they have been on a 60 Minutes interview that aired on Sunday this past week, and it re-highlighted not only the importance of the semiconductor industry and the supply shortages that we're seeing right now, but it also, in a key point, showcases our reliance on non-United States based industries and why I think that there is going to continue to be a lot of potential growth in foreign stocks that may or may not be traded on the United States stock market. Some of the things that I would highlight is that we have talked about Taiwan Semiconductor a number of times, and I will drop those videos in the cards here in the video so that you have a chance to check them out. If you find videos like this helpful, please consider leaving a like and subscribing. So let's talk about Taiwan Semiconductor Manufacturing. So the company as a whole is worth right at $601 billion. This is one of the largest companies in the world by market cap, and definitely the largest in Taiwan, not the largest in China. So essentially what they do is they produce a lot of the components for companies like NVIDIA, AMD, Apple, and a number of companies that utilize semiconductor chips. So when we keep hearing items, especially surrounding this concept of inflation and this idea that there are a number of services that utilize chips, what is key in making those are these companies that are essentially called foundries, and they build a lot of the materials that are utilized in that software and in those chips. So essentially what TSM does is they are building the foundation for someone like an NVIDIA, a MU, or what have you to come in and be able to build that type of research. One of the reasons why they are so much larger than anyone else in the space, inclusive of Intel, is the fact that they continuously are performing at a much higher capability, especially with their 3nm chips, which is 2 generations ahead of what Intel is currently producing at the 5nm chips. This means that their capabilities are going to be much, much faster. If we look at some of the charts just associated with the company, you can see that year to date, they've actually traded for the most part pretty flat, if not down a little bit. The reason for this is because there's been a lot of concerns over tech valuation this calendar year, as well as the increasing reliance on foreign-owned companies. However, this is an industry that is expected to continue growing. And I think that the fact that they've continued to hold at this level has provided a great time to continue to build a portfolio. This is one of my largest holdings in my portfolio, albeit that's through index funds. I am heavily invested into foreign-owned index funds, and that's by no means a recommendation. This is just the opinion of some guy on YouTube. I encourage you to do your own due diligence. However, as you can see, as with the broader market, this is a company that has done very, very well over the past year. What I want to highlight for some of their growth prospects going forward is that from a revenue perspective, from a valuation perspective, this is a company that will be paramount going forward, and I think that we're on the precipice of a very healthy pullback, and I don't consider this a problem because I'm investing for long term. I think 2025 is generally speaking what I look at for investment purposes. What I'm going to highlight here is from a valuation perspective that they continue to grow from a trailing 12-month. This is a 20% growth rate, and they're growing earnings per share at 35%. Both of those are very, very valuable as a shareholder, especially when that 20% growth rate is coming in at a near 40% net profit margin. This is after all of those expenses. So what we're highlighting here is that yes, they're growing at a rate that's faster than a lot of their competitors, but they dominate this market. There is no one who is capable of really infringing on that territory aside from potentially Intel, which at this point in time is still 2 generations behind what TSM is producing. TSM is also currently investing very, very heavily in capital expenditures, chiefly to utilize some of this cash that's coming in to go out and produce more production capabilities. For that reason, I anticipate that they will continue to grow very effectively. You can see that reflected here in their financial strength, where you can see that they have a very low quick ratio, which means that they have a lot of assets compared to their debt. And you can see that they have a very low total debt to total capital ratio. So their financial position is very, very strong. Now, to put all of this in a numbers perspective, I just want to showcase how they're growing their income on an annual basis. If you look at total revenue, they grew by 30% from 2019 to 2020, and that is in sum of $300 billion. So this is a company that is rapidly growing. I misspoke, $300 million. And so for that reason, I think that this is a company that is going to continue to perform very, very well. That being said, there is still always risk associated with these companies, especially one that is operating in Chinese territory with Chinese-U.S. relations. However, due to the fact that they are such a key supplier, I anticipate that they will continue to perform very, very well. You can see that their cash balance continues to be very, very high at nearly $800 million. So they have the capability to continue to reinvest in the company, as well as the capability to continue to reinvest. It shows that they have the financial position to be able to continuously perform at a very high level and dominate the industry like they've done before. You'll also see a lot of this money is going to continuously be reinvested, not only in the form of dividends, but as well as the effect of capital expenditure, so they can continue to grow production capabilities. All that being said, I am obviously long in the company, and there are a lot of other investors who see a lot of potential there. I would highlight, if you look at this chart, there's only one buy, one sell side analyst, and it's just not getting a lot of coverage. I still think that this company is very much so underrated, in my opinion, especially given the importance of semiconductors out there. So feel free to check them out. Feel free to learn a little bit about the company. I am very much so biased, but I like the company a lot. And if you found this content helpful, please consider leaving a like and subscribe. I cover a lot of the semiconductor market, and I think that this is one that's going to continue to be dominant in the future. So thanks for watching. Hope you found this helpful, and I'll talk to you later.